Something big is happening behind the glass doors of Chase Bank, and most people have absolutely no idea what's coming next. We're not talking about rumors or random internet chatter. This time, credible financial sources are confirming that Chase Bank and several other major U.S. institutions have quietly started to revise their foreign currency exchange procedures. And if you've been following the Iraqi Dinar revaluation story for years, this sudden shift is like a thunderclap in a quiet sky. We've waited, speculated, and watched countless updates come and go, but this feels different. Reports indicate that Chase is specifically adjusting its internal systems to handle dinar and dong transactions with far more precision than ever before. That's not something a bank does unless it's preparing for something significant. It's not a drill, and it's not another internet theory. The pattern we're seeing right now points toward real movement behind the scenes, and if we're right, it could be the strongest indicator yet that the revaluation process is stepping into its next phase. Think about it. Banks don't waste time updating policy frameworks for currencies they don't expect to handle soon. The reason these changes matter is because financial institutions operate months ahead of public announcements. They align internal policies before any official word is released. So when Chase Bank updates its foreign exchange compliance rules and retrains staff to handle non-traditional currency pairs like IQD or VND, we have to ask ourselves, what do they know that we don't? And more importantly, why now at the edge of 2025? Some insiders suggest that Chase's recent moves are tied to tightening global liquidity standards and Basel III requirements. But others argue this goes deeper, that the banks are quietly building infrastructure to manage high-volume redemptions once the dinar exchange rate is officially adjusted. Whatever the reason, the convergence of timing, policy alignment, and tech integration is too specific to ignore. We're witnessing the kind of silent preparation that usually precedes a financial transition, and if history teaches us anything, banks always move first, long before the public realizes what's happening. So before we continue, make sure you stay till the end of this video, because by the time we finish, you'll understand why these updates at Chase Bank might be the missing piece we've all been waiting for. Let's break down what's really happening beneath the surface. Over the past few months, Chase Bank has been restructuring its foreign currency protocols, particularly around currencies classified as exotic or restricted. The Iraqi Dinar historically falls into this category due to Iraq's evolving economic landscape, fluctuating oil production, and controlled exchange environment. However, in 2025, a series of new banking regulations are being phased in, ones that require institutions to maintain transparent reporting standards for all foreign currency conversions. That alone could explain part of this move, but the details go deeper. Multiple tellers and mid-level employees, according to internal chatter, have received new training modules outlining how to process dinar and dong exchanges within specific transaction limits. Those limits, reportedly tied to anti-money laundering protocols, indicate that banks are preparing for a controlled, tiered rollout of exchange capabilities rather than a chaotic flood of customers demanding instant liquidity. Chase's digital infrastructure upgrades also match this timing. Their back-end system, specifically the integration between the FX desk and retail branches, is being unified to handle higher-value conversions in real time. For us watching from the outside, this signals one thing: readiness. Banks don't implement new currency modules unless there's a legitimate expectation of customer demand. Meanwhile, international signals continue to align. The Central Bank of Iraq has been gradually tightening monetary supply, canceling old notes, and stabilizing its reserves. When combined with global oil trade settlement shifts and the trend of de-dollarization across Asia, the environment looks increasingly ripe for a managed rate adjustment. Whether that adjustment is a slow crawl or a dramatic revaluation, it's clear the global stage is being prepared. And what makes this moment unique is how quietly everything is happening. No flashy headlines, no bold statements, just the methodical work of systems being aligned for a future moment. For those of us following the RV journey, it's both exciting and nerve-wracking because we know what this level of preparation implies. Chase Bank isn't making these changes in isolation. Wells Fargo and Citi are rumored to be reviewing similar compliance structures. The coordination across institutions suggests either a new federal directive or anticipation of upcoming exchange window operations. And while skeptics argue that this could all be routine compliance work, we can't ignore how the timing coincides with Iraq's fiscal reforms and the IMF's latest economic review. Every puzzle piece seems to fit just a little too perfectly. Now here's where things get even more interesting and potentially game-changing for everyone who's been waiting for the Dinar RV moment. Chase Bank's internal policy adjustments for 2025 reportedly include new customer tier categories for foreign currency exchanges. That means transactions could soon be handled through designated financial centers, possibly separate from everyday retail branches. These centers would be staffed with higher clearance officers capable of processing international-level redemptions. In plain English, that's a sign of segmentation, banks preparing for volume control when high-value currencies begin moving. Another detail quietly surfacing involves transaction thresholds. Chase may soon require pre-registration or appointment scheduling for Dinar and Dong exchanges above certain amounts. If verified, that policy alone confirms that they expect serious activity in this space. Add to that the latest chatter from regional exchange desks, suggesting that software testing for new rate tables is already underway. We might be standing right before the curtain rises. But here's the key insight. When big banks make moves like this, they always do it with coordination and compliance cover. It's not just about being ready. It's about being compliant, risk-averse, and legally insulated before anything official happens. So if Chase and others are aligning themselves now, it means the regulatory conversation is already active behind the scenes. The institutions know what's coming before the public ever hears it. We, as everyday investors and observers, are simply catching the first ripples of what could become a major tide. And if the RV process truly moves into its next phase, early awareness could make all the difference. That's why it's so important to stay informed, cautious, and ready to move wisely when the moment arrives. The financial system rewards those who pay attention before the headlines break. So if you've been following this journey for years, if you've researched, prepared, and waded through endless speculation, this may be the moment where patience starts to pay off. We're not saying the switch flips overnight, but all signals indicate that the gears are in motion. Keep your eyes on Chase Bank's updates, monitor official exchange bulletins, and never act on hype alone. Real confirmation will come quietly, then suddenly, just like every major financial reset in history. Stay alert, stay rational, and stay ready. And before you leave this video, make sure you tap that like button, subscribe to the channel, and share this update with others who need to hear what's happening right now. Because the truth is, only those who are paying attention today will be ready when the doors finally open tomorrow.